Now we're going to explore a critical macro subject and more formally understand the consequences of this current global oil shock. And it's called global oil shock modeling. Our chief equity strategist and economist, John Blank, is going to take us through this. John, what exactly is global oil shock modeling?
Well, Terry, global is in the sense that the price is determined globally, not by any country or any firm. So everybody's a price taker at the global level. That's number one, global. Oil shock means when the market's been shocked, like it has with the Iran conflict, suddenly the deprivation of 20% of the world's supply of oil and all that goes with it is gone. That's the shock. And then, of course, that caused the first price run from 60 to 90 or 100, where we are now. So the next question, on top of a global oil shock, is where does this go from here? Because that's the question an investor has to ask. And so modeling can be done in a very effective way because it's a market where supply and demand does go in as inputs, and it has well understood transmission mechanisms for macroeconomists, and they can tell you, Terry, where the price is going to be 2 quarters from now, 3 quarters from now, and so on.
So, why then is this important to understand for us?
Because Terry, if they use the parameters of the 1970s oil Arab embargoes, which are consistent with what's going on now, it took 3 quarters for that to be resolved. And so if you start at the end of February, basically, let's say quarter one, you end up in November, just in front of the election, for 3 quarters. And so if you do a 3 quarter oil shock model, it'll tell you right before the US election what the price of oil will be then.
What then is the impact of this on investing, especially in the oil stocks?
Yeah, Terry. So if we're at $100, actually $90 a barrel at the moment, in 3 quarters, which is now getting closer and closer. We're halfway through the second quarter, and so we're getting within 4 months of this final fuse, we can get to $167 a barrel WTI for crude oil barrel. So that's a 70% jump from here, and that will push up the 10-year treasuries and all the global government bonds from there, because it correlates to higher inflation, and higher inflation has to be managed by all these central banks, which they all raise rates. So this then blows up your stock portfolio if we ever get there.
What about economic impact?
Well, the impact on that is also, consistent with, something that sticks with us and destroys demand for at least a year. I mean, for every day the Strait of Hormuz shut, it takes a week for us to fully recover. So we're now looking at, very much the case that we're going to be, at least 75 or $80 a barrel of oil into next summer, no matter what, even if the Strait of Hormuz opens.
Which is the greater and more troublesome impact on stocks or the economy?
Well, Terry, there's an interesting thing that has happened that's kept the economy afloat, which is the stock market's bullishness has led to half of spending coming from the feeling of those who own stocks to keep consuming. So the top half of the income profile, if not the top 20%, is all about the stock market. So the stock market blows up, it's going to cause a consumption shock on the wealthy consumer that's going to be consistent with what's happening on the poorer consumers.
What about impact on the oil supply, and what determines that?
Oil supply is sticky, Terry. People are not yet believing that it's going to be the case that we're going to get an oil shock out to 3 quarters. The market, whether it's an analyst, whether it's OPEC, whether it's IMF, whether it's World Bank, whether it's OECD, I mean, all people studying this considerably set their consensus that by the end of May, which, by the way, we're talking the 28th of May, this was supposed to be over, and it's not over, Terry. And so the way this affects all of us is consensus starts to ratchet up here in 2-3 months, and people realize the Strait of Hormuz will be shut for a long time.
Do you have any expectation as to how long this oil shock will last? I think you said in a separate interview that I heard you don't see it as transitory.
No, Terry, I mean, I have to look at it from the Iranian perspective, because they're the agent that's keeping the oil Strait of Hormuz shut. And their maximum negotiating leverage comes with shutting the Strait of Hormuz until right in front of the U.S. midterm election. So I think, when there will be a negotiation is when they have the most leverage, which is October. And that until then, we're going to actually see a shocking scenario where it does go to where I'm talking about before they sit down with us, because that's where they get the best terms.
What do you think the probability is that this is a prelude to a recession, either here or globally?
Well, Terry, I think it's a done deal if we get to that October scenario. So I think, we're going to see an endless discussion about, opening the Strait of Hormuz before that. Massive pressure, not only from the United States, but from Europe, from all the other Gulf countries, from Asia, from China, from everybody to get it open. So there is no question a high probability, but not a maximum probability, not over 50%, but maybe 30 or 40, that these other groups finally push Iran into a deal on the other side of the coin. Because the other part of the leverage is not just leverage between Iran and the United States, it's leverage between all these other parties that are also affected by this event because it is global.
All right, next, let's take a look at three. Zacks number one strong by large cap stocks benefiting from fresh analyst earnings upgrades. Centene, Maycom Technology Solutions, and Estee Lauder Companies.
Yeah, ticker CNC is Centene, and Centene is right now trading at about a little under $60 a share, Terry. But, if you picked it up back in the early 2024, it was $80 a share. So we can definitely get a run back into these defensive names. This is an HMO medical company, a very big one for the United States, with an A for growth and a B for value and a number one ranked stock. So if you're looking for people to rotate all their winnings out of AI and oil stocks to something defensive, Centene's your play.
Maycom Technology Solutions.
Maycom Technology Solutions, they provide power analog semiconductor solutions. So this is, in effect, the chip stock, and it is just absolutely barreling ahead. It's $400 a share. You bought this basically in 2024, it was $100 a share. So this, of course, gets an F for value. But here is what's going on underneath it, which is a 10% upside revision to earnings this year and 22% next year, because people still think that these chips are this place, picks and shovels for this whole AI thing. I am very skeptical of that, but I will point it out as a number one ranked stock. But I would be a seller, not a buyer.
Estee Lauder Companies.
Estee Lauder Companies, Terry, here is a B for growth stock with a number one rank. It's getting upside revisions, 7.5% this year, 4% next year. It's cosmetics, of course. So these small item consumer spending things can be a play here when the consumer is stretched, because it is a way to make yourself buy something that you enjoy without spending a lot of money. So little hidden play here, ticker EL.
Our chief equity strategist and economist, John Blank, on global oil shock modeling. With John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.